Hi there, I'm here at Bio Europe with Hubert Birner, the managing partner of TVM Capital. And so, Hubert, your latest fund has raised over $200 million. But unlike previous funds, this one is focusing on taking drugs or therapies only just to proof of concept. Why did you decide to do this?
So, TVM 7 has this investment strategy as a primary investment strategy to develop drugs in a project-focused company, which is project financing. The reason we did it is because we believe this approach is one way of dealing with the capital constraints you have in Europe and in other places like Canada, where we can now finance with $10 to $15 million an asset all the way from R&D stage to a very significant phase 2 in a significant patient population on our own. That is the big advantage. And the other big advantage is from a capital efficiency perspective, basically 80% of the money goes into the asset and only 20% in overhead, whereas in a classical biotech company, 80% of the money goes into overhead and only 20% goes into the asset. So we have done 10 of those project-focused companies in Fund 7. The investment period has just finished in September. We have had 3 proof of concepts so far. One company is that is moving very fast forward is Excelsis, which is a spin-out from Pfizer, which is now in phase 2B. So we're very happy with the outcome so far. We will continue to do that in our next fund, and I believe it's a very valid model for a place like Europe where there is not enough venture capital.
And so it's been said that 2016 was one of the worst years for biotech finance. How are you adapting to this, and do you think this trend will shift? Will it start getting better?
So 2016 mostly is considered a bad year in biotech financing because there was very little public market activity. So companies could raise much less money on the public markets than in previous years. And there's also the usual problem that many of the venture capital groups have been in fundraising in 2016 and not having enough funds available. So my hope and my expectation is that 2018 and 19 will be better. There's a lot of capital coming back to the market. We see a lot of new activity in Germany. We see a lot of new activity in France. I'm skeptical that for the time being we'll see a much more activity in the UK given the Brexit issues, but I'm taking a positive view on the next couple of years. So I'm not pessimistic.
Yeah, good to hear that. And so you are investing in companies not just in Europe but also in the US and Canada. So what are the main differences you see between continents?
I think the main difference we see is that the co-investors have more capital available in the US. I think from a quality of asset perspective, I see a very significant advantage now in Europe. There are very great assets available. They're well developed up to a stage where they become financeable through venture capital, much better than in the past. And we also see one of the usual issues was about poor management teams. We also see a strong improvement in the quality of management teams. So I guess I'm coming back to the same issue, is having enough deep-pocketed money around the table or an investment strategy that allows you to live with the constrained capital you have is the success factor. And there the US has much more flexibility.
Okay, but independently on where the company is based, what do you look for in a company when deciding in which ones to invest?
What we look for is very simply an exit potential within 3 to 4 years. So we have in Fund 7, which we have in Fund 8, this project-focused company approach, which I explained to you, whereby assets will be exitable after 3 to 4 years, not 7, 8 or 9, 10 years, which is the usual issue in venture-backed companies. And then we also invest in more syndicated type of deals in very later stage companies that also should have an exit horizon of 3 to 4 years. So they can be therapeutics and medtech. So that's the primary objective, is how fast can we exit and how fast can we add value with our investment. And then the secondary is really in terms of therapeutic focus. For us right now, it's on the project company side, it's oncology as a primary driver, given all the amazing innovation that's going on and the opportunities that there are. To a certain extent, CNS, but it's much more complicated and takes much more money to come to a significant proof of concept. So our $15 million may not be enough in most of the cases. And to a certain extent, areas where what you call rare disease, where there is not enough pharma money going into that. So this is where we're focusing on. Okay.
Yeah. And so, as you said, you invest in several different areas, therapeutic areas. So, but for you, which one has the most potential?
For me, the one with most potential right now for us is oncology. We have a lot of interest from pharma for that. A lot of the public research is going back into oncology now with immunotherapy as the primary drivers. And the deal flow has tripled for us in oncology companies in the last 2 years. That's where we're most focused on right now.
Okay. Well, thank you very much.
Thank you very much.
Enjoy the rest of your day.
Have a great day.